Wall Street just threw a party, and almost every single sector got an invite. If you blink today, you miss the S&P 500 and the Nasdaq smashing through to brand new all-time highs. Let's break down the scoreboard. The S&P 500 surged 1.46% to close at 7,365. The Nasdaq was the real star of the show, rocketing up over 2% to finish at 25,839. The Dow Jones, not far behind, climbing 1.24%, flirting dangerously close to the 50,000 milestone at 49,910. And here's where it gets really interesting. The 10-year Treasury Yield dropped to 4.36%, falling over 1% on the day. That means bond prices are rising, money is moving, and the implications are massive. So why did all of this happen? 2 words: Iran deal. Reports surfaced today that prospects for a deal with Iran are brightening significantly, and markets absolutely loved it. Oil prices tumbled on the news, which acts like a stealth tax cut for consumers and corporations alike. Lower energy costs mean better margins. Better margins mean higher earnings. Higher earnings mean stocks go up. It's that simple. But here's the kicker. It wasn't just geopolitics fueling this rally. The chip sector went absolutely nuclear. ARM Holdings dropped a bombshell in its earnings report, saying its new homegrown chip will generate $2 billion in revenue. That's double what they previously estimated. Double. Nvidia rode that wave too, leading a fresh round of buying across the semiconductor space. When the chip giants are flexing like this, it tells you the AI infrastructure build-out is not slowing down. It's accelerating. Now, not everything was sunshine and rainbows. Warner Bros. Discovery reported a brutal $2.9 billion net loss tied to its Paramount deal and restructuring costs. And Snap issued cautious guidance after its deal with AI startup Perplexity fell apart, while flagging uncertainty from the Middle East geopolitical situation. So even in a rally like this, there are landmines. You have to be selective. Think about it. Market sentiment right now sits at 68 out of 100. That's solidly in greed territory. Not extreme greed, but enough to make you pay attention. The yield curve spread is normal. Unemployment sits at 4.3%. The foundation looks stable. But here's what could change everything. Tomorrow, non-farm payrolls drop. The unemployment rate gets updated, and we get the preliminary Michigan consumer sentiment reading. That is a triple threat of economic data hitting the market in a single session. If the jobs number comes in hot, the Fed stays hawkish and this rally could stall. If it comes in soft, rate cut expectations surge and we could see another leg higher. So what's the bottom line? Today was a gift from geopolitics and semiconductors, but tomorrow is a test. The market is greedy, momentum is strong, and new highs are in the books. The question is whether the economic data confirms the optimism or punches it in the mouth. If breakdowns like this help you stay ahead of the market, smash that subscribe button so you never miss a beat.